Hey everybody, hey traders, welcome back. Happy Wednesday. CPI Wednesday. Market is clinging to some positivity today for the first time in a while. Let's discuss. So, broke this down all this morning. Here's a short-term look at the SPX. Here's the daily look as well. So we started out with a nice little gap to the upside. We are still hanging in there for some positive traction on the day, mostly due to a gap higher and just maintaining that gap higher. So intraday, you can see a bit of noise. Gapped higher, faded down, filled the gap, didn't quite poke the lows from yesterday. Just a lot of indecision. Hopefully, this is carving out some lows in the near term, and we'll see if this level holds. What I'm kind of liking about today's structure is previous high, today's high, a little bit of a head and shoulders look. So if we get a break, a fresh break above 56.50, and we take out that low from last week, we could probably safely measure move up into 57.50. Also some past resistance and support around 58 and change. I said my kind of de-risking area would be around this 5,800 to 5,900 zone. And yeah, I'll just look at a measure move right about here. So let's jump into the charts and look at a low to high. If we can break above that for a bit of head and shoulders pattern, that would safely push us up into about 57.50. That would be a gap fill. So we'd have a couple things. We would be taking out the low from last week. We'd be getting very close to that gap fill from that monster sell-off on Monday of this week, which was a crazy Monday, and possibly coming back to the backside of the trend line. Now, let's take a look with a slightly higher time frame lens. I did this on the QQQ this morning. I'm doing this on SPX and SPY, showing kind of the same setup, where if this is a low, high to low, there are some reasonable pullback levels in the near term. So provided we can hold and maintain this low here, looking for a 236 pullback, a 30% pullback, 38% pullback. If we get really lucky, a 50 to 61% pullback, if we get lucky. So if you look left on the chart, I'd say this election gap causes a bit of a fight between the bulls and the bears, and all of this structure in here, which was really nice support. So support here, support here, support in here, and that is around 58.50. So that level, 58.50, if you have an opportunity to get out of some trouble, or even in the near term, grab some near-term profits, I like that level for a de-risking. I'll keep saying that word as this is all materializing. Hopefully that is the play for the next maybe 2 to 4 weeks. I don't think the market is showing us any signs of just a crazy V bottom, even with the improved news today. Here is the CPI data from this morning. All coming at 8:30 a.m. Market had let's go core CPI. So month over month, the previous print was 0.4. This time forecasted 0.3, came in 0.2. So a little improvement there on core CPI month over month. Previous print for core CPI year over year, 3.3 was the previous print. 3.2 was the forecast, came in 3.1. And then you look at the month over month, the headline CPI previous year over year was 3%. That was high from last month. Forecasted for 2.9, came in 2.8. So across the board, CPI data coming in good. The market kind of ran with it, little jump this morning. Take a look at futures today. This ended up being a fake out. I was looking to see if there was going to be a break, retest, and then possibly another push lower. That did not happen. So we just ended up coming back down to sniff out that low from yesterday, but a very quiet day today. Same thing with the Qs or the NQs. Didn't quite get down to the lows from yesterday, but found some really good structure intermediately with the overnight action from futures around like 6 p.m. kind of the global flows. But right back where we started, we're right here with the 8:30 candle, and we are right here with the 8:30 candle. So not a lot of traction on futures today, and honestly, it feels totally fine. I'm happy with this. Hopefully by today, if we're above 55.25, I have 2 trades running. They should be showing some pretty good profit here towards the end of the day. This is a broken wing butterfly combo. Let's group this here. Broken wing butterfly. Right now, that trade that I got 60 cents on is trading for $59, and this one that I grabbed 50 cents on is trading for $48. So both looking pretty good for full profit. End of the day, took another trade here for a 250 credit out for $2 for another 50 cents. So net for some day trading, that would be a nice little day, plus 60, plus 50, plus 50. So $1.60 on the day, not too bad, just for a little short-term action. And we'll see. I've got about 50 minutes before those close. Also, if price does end up coming back down a little bit lower, there is a profit trap. So hopefully I'm in good shape, if there is any pullback. But I would honestly just rather see price just go up. Price goes higher, resume this little continuation, look for a gap fill. We'll see what we get going into the close of the week. Next week is going to be FOMC on Wednesday. Also a big monthly expiration on Friday, and we'll see what those type of volume flows look like. But keep it simple, right? High, low. Do we pull back into some of these retracement levels? If so, quite a few ways it plays out. This could be, a slow, orderly grind to the upside. And if that is the case, I wouldn't get too excited about being bullish. If this is like this really choppy, slow grind to the upside, something tells me that once this is done, these bears could possibly come right back down to the lows. They may not break the lows, but they can come back with a vengeance and get it right back down to the lows within, maybe a matter of days. So lots to pay attention to here over the next, I'd say, 2 to 6 weeks. So we take this in the end of March. We take this into April. Let's see if we get a pre-summer push where, April, May sets us up for something positive going into the summer, or not. I mean, that's the hard part. Is typically we see flows in the markets that give us some, positive gains. If you go to yearly seasonality and take a look at month to month for the S&P, let's go to S&P. 10-year average for April and May and June and July. I mean, your best part of the year is going to be that bulk May to August. So if we can survive March and April, with obviously February being a heavy sell-off month, March is just getting underway, kind of finding the pain lows of the February slide. If we come back off those lows a little bit, settle in for March, stay stable or recover slightly in April, we'll see if we can get through a May to July rally, May to August rally perhaps in the near term. But I think in order to get a sustained rally, we're going to have to see a lot more positivity, a lot more optimistic commentary and narrative out of the U.S. So less on tariffs, less on pain, less on Doge, and more on tax cuts, more on deregulation, more on drilling, more on lowering inflation, more on maybe Fed guidance. So there's still resiliency built in the market. For at least the near term, it looks like this pain trade has kind of subsided, and that's certainly feeling better than just watching this thing go down. Mags today is reasonably off the lows, which is kind of nice. Let's take a look at today's heat map. So we've got some decent gains. Apple is down in the day, but Tesla coming back in a pretty good way. Nvidia up a little bit. Meta, Google, CRM. Take a look at a couple of these. So this is live price. This isn't done yet. Get out of here. We've got Broadcom up a little bit. Salesforce up a little bit. Salesforce, I took a trade on that with my Newsbreakers course. Did I take CRM or did not? I guess I didn't. CRM. Nope. Okay. I did price that one out this week. I just didn't like the option pricing. So, it hasn't moved a bunch. I was looking for like an earnings, probably an 8, 9, 10% move. It's, only moved up 3%. So nothing crazy there. I did have a chart alarm going on Intel, which if you're looking for something kind of longer term, I'd say longer term. Let me see what I have running on Intel. I think I took some profit on my diagonal spread. I don't know if I want to redo this trade. It was pretty solid. I bought some shares around $19.30, and I took profit in this first little zone around about $24. And we were high up to like 26 or so. I think we had like 26 or 27.61. So I grabbed profit on a pullback towards like $24. And I'd do it again. 19 to 24 is a pretty good gain. 20 and change. So what I might consider is, let me see if I have any exposure right now on Intel. I thought I had a diagonal spread, but I might have closed that for profit as well. Okay, this might be a trade that I consider going out to 2027. So if I bought a deep in the money call, could I get another rally back up towards like $25 or $26? And that is my question. So let me see what that would cost me if I consider that trade. So let's go. I'm going to look out to January 2027 and buy like a deep in the money call. So we are trading at $20.64. If I buy a $5, and it only cost me $1,600, so that puts me at a break even around $21 and change. So I could just treat this like a diagonal and sell like a $22 or $23 call and sell that in the near term. So let me see if this actually works out. If I go out all the way to January, pay $1,600, maybe I'll do 2 contracts, so it's around $3,200 max risk, and then I'll sell some premium against that to maybe generate $3, $4, $5 of income. Let me see what I can do. So if I go January for the call, let's look out into April. Maybe we have an earnings poke. If I go through April 25th, if I get an earnings stab here, 2250. So now my break even would be 5 plus 1508, and a break even, get it called away at 2250. That's 242 on 2 contracts. That's a little $484 winner. Wouldn't be bad. That's doable. If I wanted to lower the cost basis even more, I don't know if I'm going to get the premium that I want, but I've got a break even of 1635. Would be 2135. So if I sell a 2150 minus $1.17, get it called away for 2150, make $1.32, make 264. Yeah, kind of like that little $500 winner in about 44 days. It's not a bad trade. Also, I've got plenty of time in this trade in case price doesn't cooperate. I think I'm going to take this trade. I'm going to go 2250. 23 is not that different. For a 50 cent more profit, I'm only paying about 10 cents more. Interesting. So this depends on the fill, but if I can get this one called away at 2350, that would be 5 and 1530. Get it called away at 2350. Now I make 640. That's not bad. All right, let me see if I can get this trade for 1530. I'm going to go 2 contracts. Requires about $3,000 in buying power. That shouldn't be the case. Okay, $500 in buying power on margin accounts. And let me check my IRA accounts. 3,000 in IRA accounts. It's okay. I've got some capital to work with. All right, let's try this one out. So depending on where I get filled here. So right now it's showing a mid price around $15.15. I'm going to go $15.25. Try to get filled just at the mid price. So this would be a 5 by 23.50 for $18.25, and that gives me an $18.50 potential profit. So I'd make $3.25 per contract on this if I'm correct, and it gets called away at 23.50. Let's see what happens. The spread is a little bit wider. Bid to ask looks like about $1.10, $1.20 wide. So let's see if I can get this for like 15.25. So not filling at 15.25. 15.30 not filling. 15.40. Okay, final offer on this trade, if it works, is going to be 15.50. That's just above the mid price right now. All right, that got filled for 15.50. What? So 1550 filled. 1550 pending. Just going to let that one marinate for a second. Pending on this one. I'm just going to leave this one pending at $15.50. Not found. Okay, let's try this one. There we go. You kidding me? That one fills at 1550, but not the other ones? That's weird. Filled at 1550 here. Easy. This one's still pending. This one's still pending. This one filled. 5 by 2350. 5 by 2350. What the heck? Okay, let's try. Strange. Okay, pending order right there for 1550. There we go. So weird. Okay, so I've got a couple accounts that got filled and a couple that are pending. That's really odd. So I got filled at 1550, so I'm just going to leave those other ones to sit there and take the same trade. So this is INTC. So I'm going 115 of 27, $5 buy call, and a 425 expiration 2350 sell call. Total debit was $15.50. So that means break-even price is $20.50, which would give me $3 profit per contract if greater than $23.50 by expiration. All right. I'm going to put this one in for my project options edge because it's kind of a bit of a bonus play. Let's go here. INTC 120 expiration by the $5 call, 425 25 expiration, sell the 2350 call, $15.50 debit, filled. So the way this trade looks, let me build this one out for a moment. That was a trade that I put on for Netflix. Let's go on INTC. Okay, so I'm going all the way out to 2027 on the call side. That is a $5 call. And April 2350. So that's what the trade looks like. So there's pretty good profit potential. Obviously, it's kind of running synthetically. If I go ideal call zone, I'm going right through it. This is kind of why I like it, so I'm optimized. So I'm right on the call side that I want to be at. A one standard deviation move is this way. So if we have a one standard deviation move to the upside, that puts me up to around $25 to $26, which means I get this thing called away for a little profit here. Okay. So ideally, the trade would be, here's the math. So 5 by 23.50 is my diagonal spread, right? So that would equal $18.50 of credit, right? So this total trade is $18.50 as far as this thing getting called away, meaning if Intel is above $23.50, the most I can make is $18.50 on the trade. Well, I paid $15.50. So that leaves me with a profit potential. If price is above $23.50 by April 25th, which is this expiration, if price is above that, then I'm going to keep my $3 profit. Okay. And I'm doing 2 contracts. So that's times 200. That'd give me $600 of profit on the trade. Okay. So that's how the math works. If we're below 23.50 by expiration, then I can just sell against it. I'll sell another call, another 23.50, another $23, try to collect another maybe 50, 60, 70 cents. And then the debit just gets cheaper. So a 15.50 debit, I can lower it maybe to $15. If I do it again, maybe lower it down to 14.75, lower it again to 14.50. I've done this in the past on Pfizer. I took a debit around $20 on Pfizer, and over the course of a year, I lowered it down to about $10, and my net profit on the position was $5. So, I mean, it worked out where if I'm just consistent on this and it doesn't really move to get it called away, I can still sell premium each and every time. So that's how the math works. So I'm going to build this one out. This screenshot's going to go into my Telegram channel for Project Options Edge. This is what it looks like right here. Screenshot. Chart alarm is going off. Let's see what's that. What does that mean? That was weird. Okay, chart alarm is Walmart crossing. Oh, hitting the 200 EMA. Gotcha. Okay, I think I'm going to take a protection on my put for Walmart. I'll have a look at that one in just a moment. Let's go filled. All right. So 15.50 debit, 18.50 max credit. The goal is for Intel to be greater than 23.50 by April 25th expiration, to then close the buy call and sell call together for 18.50 18.50 credit. Yeah, 18.50 credit or close to it. Okay, let me check Walmart. So Walmart this is good because I almost closed out my puts yesterday on this collar trade. We are approaching this 200 moving average. I guess we can go a little bit lower. Check Walmart here. So Walmart, have my shares, have it covered at 105. That covered call's up around 90% right now of max credit, and my put is up around 280%. So that protection on the put side to me is pretty solid. I could close them both out. So let me see. My break even's around $90 on Walmart right now. If I close this thing out for a credit, I get $1.50 to lower my overall cost basis. So that brings my cost basis down to about $89 or $88 in total. I can then put on a new collar trade if I want to, which I don't mind doing that. And it's probably the best thing just in case. I mean, if this is not going to stop going down, I want to make sure that I've got protection where, I mean, nobody knows here. This stock, if you look at this just from a larger swing, I mean, this is insane to think like, oh, Walmart could drop. Here's a 30%, here's a 38%, here's a 50%. I don't want to be on the hook for a stock that's going to drop into the 70s or, let's say $70. It's another $15 on this position. That's a big percentage down. That's another, maybe 15% lower. So if I lower my cost basis right now, I'm probably going to put on another collar trade. So let me see if that is worth it. But I think closing out the put side right now. So I'd be taking, see if I can get see if I can get $1.50 for this. So let's get $1.50. No, be generous. $1.49. I'm just going to penny this down until I get filled. Come on. I mean, the bid price is $1.41. $1.45. Come on, Walmart. All right, just got filled for $1.43. This one, let me check and see what that one was. That was a 76.67 by 105. This one I have an 80 by 105. That $80 puts up 260%. Close this one down for $2.50. Okay, I'll take that. 252. 256, not bad. All right, so I've got a $1.43. And I have a 256. So that's helping me lower the cost basis a little bit. Let me get through these really quickly so I can track this. I've got 2 and 2. This is an 85 by 110. That 85 puts up 278%. Close this out for 440 credit, even better. Oh, come on. $438 credit. 438 credit. Next we have this one closing for $1.43. Okay. This one for $1.43. Come on. Filled. Okay, good. This one has no Walmart. This one has no Walmart. No Walmart. And this one has no Walmart. Okay. So let me update my break even on WMT. So I have the one for $80. This 80 put closed out. Net collar closed out on this one for $2.56. Just got to do some updated tracking here. Close collar for $2.56 credit. Gives me a new break even. $93.22. Okay. The 110 by 85 collar. Closed collar for $4.38 credit. So that gives me a new break even on that one. Where did I buy that one for this account? I own shares at 91.42 minus 4.38. 87.04 is that break even. And collar 100 by 80 for $1.43. Okay, so I need to add in a new collar trade. Break even is around 90, anywhere between $87 to $93 on my accounts. So to be safe, I'm just going to let it get called away around like, there's my 1550 debit on Intel. Good. It's getting filled. Good. Okay. So that's good. Get those added in. All right. So let me look at a new collar trade. So Walmart to keep the shares. I will go out. So I just have 200 shares. I go at 100 days. If I get it for the 90, I don't mind getting called away at like 100. Let me just take a look at the technicals here. So if Walmart can bounce back up into this like 96 to $100 zone, 100 might be tough. It might be difficult to get this thing called away at 100 bucks. But if it does get called away there, that would be pretty ideal. But I do need to have the downside protection just in case this thing overshoots the 200. I want to have that downside protection just in case we're pulling back into deeper retracement levels. So if I get it called away, 100 would be fine versus trying to go after the all-time highs. But if I protect it so it gets called away here, so this would be my -1 call, and down here would be my +1 put. And the idea is to take this trade for a net credit and then have it long enough and out of the money enough that it's cheap to get a net credit on position. And let's see if this wants to go down a little bit lower. Otherwise, if it bounces up, that's fine. Don, no. I'm just waiting for my lines in the sand to hold. The biggest one for me is XSP 560. That's out to the 28th. That's our nearest expiration, and that's the level I'm watching. So if we're above 560 by March 28th, XSP is a winner, and we're going to have literally a waterfall of profits from a lot of those, bull put spreads being profitable in waterfall. Okay, so let me see here. 95 isn't awful. If I want to make some profit on it, though, I probably need to go out to like the 97.50 or the 100. If I go 100, that's about a $15 position different. I might have to go one strike lower. There is some put skew here, or pricing skew rather. So I mean, if I go the 97.50, that's only about a 12.50 move to the upside, and then to protect the downside, I could protect this at like the 70 put, which is around 11 delta. Let me see. Do I want to go out that far for this trade? This is out to June. I mean, that's 30 cents credit. If it gets called, if we rip to the upside and we get called away at 97.50, then I'll get anywhere between 10. Like low end's going to be about $4 a profit. High end's going to be about $10 a profit on a couple hundred shares. So this isn't a bad position. This is 200 shares. Get it called away, I'd make about $1,600 on Walmart. But I also have some downside protection. Yep. Give me a second here. Give me a second. So yeah, Larry, I'll get some information on that for you. I'm trying to get a direct link. Sandy says our SPX butterfly put is lower. How do we read Adobe after earnings? I mean, we don't have earnings yet, so as soon as earnings comes out, we'll see if it's above or below where I need it to be. Right. So the trade on Adobe is for newsbreakers. I did a broken wing butterfly in that one. So as long as price, this is Adobe here. As long as price stays below 497, which is way up here. I mean, Adobe would have to have like a monster earnings report, and that would be like a 2 standard deviation move. So all I'm doing is a broken wing butterfly for 50 cents, but it has a profit trap. So that profit trap is it's either 50 cents credit on the trade, or it's $2.50 plus the 50 cents for a bonus trap. If Adobe comes out and misses earnings, that 50 bucks is pretty easy per contract. If price goes up, then I'm just going to let it go until next Friday. But I don't think we're going to make this ridiculous move to the upside. There is risk in the trade, though. I'm willing to take that risk on Adobe the way I priced it out. Most of the time, this one does not hit the expected move, which is why I'm choosing to sell premium on this one and sell the option as opposed to buy and play both directions. Okay, all right, let me go back to this trade here. If I go 97.50 by 70, so that can cover, if I go out far enough here, that's a little bit better. How much further do we drop? I mean, I think if Walmart dropped into the 70s, I'd probably want to be taking some profit. I have a feeling we are going to be bouncing here and then coming back up for at least a short-term rally. And I'm okay with that. If it gets greater than like $97.50 to $100, I don't mind it getting called away. But biggest thing is going to be protecting it to the downside. So if this just continues to hemorrhage, that's okay. What is this pullback, by the way? About a 19% pullback on Walmart. Dude, you're just up here. So question is June 20th or August? Well, if I can lower it a little bit more, August, maybe get it called away at 100. It's not bad. I'm just trying not to overcommit to the timeline here. August is okay. That gets me into kind of that seasonal trend. If we have a pre-summer push, Walmart starts to recover, getting it called away around $100 is fine. That is anywhere between like $7 to $13 a profit per share. And then if it sells off more, I'll keep an eye on this 77-cent debit and maybe take some more profit in this one to lower my cost basis even further. So, all right, I'm going to take this trade, collar trade, hopefully for 75 cents. Be 2 contracts. Filled at 75 cents. Okay, good. Add a new collar. It is a 8/15 expiration. 100 sell call and a 65 buy put for 75 cents credit. All right, so that one is now covered. This one, let me do 300 shares. So this is a 100 by 65 for 9732. Filled at 75. That one is now collared. This one needs 2. 100 by 65 for 75 for 200 shares. Filled. Okay. The 100. $100 by 65 for 75 cents. Filled. So it needs 200. 100 by 65. Filled. Nothing here. Nothing here. Nothing here. And nothing here. Okay. So trade is in on Walmart. So this trade is updated. New collar. This is a 8:15 expiration. 100 sell call by 65 buy put for 75 cents credit. And I'll keep an eye on this one for anything in the low 70s. There's enough time in the trade. If we get like another aggressive flush lower, then I'll probably look to be protecting that 65 put because it should have enough time to grow over the next like 30 to 40 days if I need it. Otherwise, I'm just going to lower the cost basis, which is around $86 now, $87, and see if we come back up into the mid 90s or so. Okay, so that debit on the collar is around 77 cents. 65 buy put for a 77-cent debit. There. For tracking purposes. All right, that is Walmart. Okay. Futures-wise, next week, have a nice little trade running on ES. That should be worth about $2,400. Let me see if there's a profit trap in this one right now. So I have a profit trap, which would be worth, what is that, 50 points? So that's a $2,500 profit trap if price is going to drop. There is a bonus profit on it right now. So that trade is 61.50 minus 55. It only cost me 6.50 on the trade. And right now it is trading for 11.50. So about 100% profit trap on it right now. It's not necessarily going to pay me, but if price continues to fall, that is protection. The probability of this thing coming back to 5,200 in the next week is slim to none. So I don't really have to do anything on the trade. But if I wanted a bit of a bonus trap on it, I do want to see what this does to my buying power, because taking that hedge off is going to make my beta weighted delta a little bit higher, and I'm trying to cut that down just a little bit. So if I close this, reduces my buying power by $1,000. Not the end of the world, but it is a, what's the net? 61. So that's $6.50. So 6.50 minus 11. What's the profit there? $11. So that's a 70% return on risk. Do I take the profit trap? It's only up $200. $200 is nice, but $2,500 is better. So I'm just going to let that trap run. Silver trap that's looking fine. Closed out some hedges on MES. Coinbase, this is a 111 trade. This one's good to April. This one, a 195. Ooh, I may. Son of a biscuit. Well, let's see what happens on this one. So this one's not until the end of the month, which is going to be not next Friday, but the Friday after. So if there's any rally towards the end of the month, we get above 195. No assignment here, pull in another dollar of credit. But I'm going to keep a close eye on that one. Costco. Bullish trades on Costco. CVX. Just have some shares of it. Dell. Fine. Dow. April. I like that position. DocuSign. That is an earnings play for this week. Adobe. That's an earnings play for this week. Earnings are coming out after market. EWJ is Japanese yen related or Nikkei related. EWD is Brazil. FTTC, that's down just a little bit for some momentum trading. FCX, this is copper and commodities. This is the DAX or Eurostock 50, Japanese yen, GLD, credit spread, and shares. That's it for right now. Google. What do I have here? I have a ratio spread on Google for next Friday. Let me see what this one is. So that's a ratio spread. This is a ratio spread. And this is a ratio spread. That's interesting. December 19th. Oh, I see. I just put that in for a wide hedge. And this is a put. Collect 254, 130. Okay, that's fine. Here's a ratio spread as well. All right, so the one I need to keep an eye on would be this one here for the March 21st expiration. Right now it's up $230. Max profit is about $232. I'm just going to go ahead and take this one off the table. This is next Friday, only 9 days out, but I've got most of the time decay, and we're still in a decent spot where they should be outside the expected move. So we're still trading at like the assignment price would be about a 7 delta. So I'm in pretty good shape just to take the income here. There is a potential $5 profit trap, which would be fine, but I also don't necessarily want the exposure. I'll take the income for $230. So for $1.16, see what this is trading for. 2 cents. Oh yeah, I'm going to take this one off the table. 2 to 3 cents debit. Okay, ask price is 5 cents. $1.16. This would be a net $1.11. Closed it for 4 cents. Okay, I like that. See what else I have on Google here. There's my March. So that trade's done March 21st. 1, 2. Ratio spread. 126, it's up 124. I'm just going to take the profit and move on. $0.03 debit. Bueller, 4 cents debit. $0.05 debit. All right, so that was another $1.21. Very nice. This one here. Max profits $2.30 or $230 is up 228. Let's take the profits. 4 cents debit. Filled at 4 cents debit. Getting some buying power back. Love it. Google here. 130. This is out 100 days. This is a 130 by 85. Keep a close eye on that one. This one, 130 by 85. This one just have some shares. This one is a ratio spread. Nice little income trade. Also should get back some buying power. Put in my... So $1.26 max profit on one contract. So it's up 123 bucks. Closing for hopefully 4 cents debit. Perfect. Nice little chunk of buying power back on that one. Ratio spread here, max profit $1.15. So 230 bucks trading for 226. Larry, on that one, yes. If you own Walmart, then yes, you take that. I'm taking that collar trade because I own the shares. Yep. Where did that position go? So we got the buying power back. Enter it. There we go. Okay. So this one closed out. Buying power is back. Very nice. Another 200 and some dollar winner. Close it out for a 4 cent debit. I will take it. And that'll do it. So nice little win on Walmart. And our collar trade, I'm just rolling out. Google, nice little winner. Very good. Bitcoin hanging in there. This is out to April, May. No pressing expirations. Intel just took the trade right here, the 5x2350. Russell, have some shares, have them covered out to April. Have a 111 end of month. If IWM stays above 190, that'll be $100. That's 111, so a $101 income with a potential $5 profit trap. So I'll keep a close eye on that one. IWM's fallen like 20%. I think we're due for a little bit of a bounce in the near term. If it just stays above 190, that's good. If we're between 190 and 195, that's actually a $600 winner. So I will keep a close eye on that one. JD needs to stay above 40 bucks by April 4th. That should be a nice little gain of around $2,000 to $3,000. My break even is like 35. It's about 2,500 bucks on that trade if I get it called away. Johnson & Johnson looks fantastic. This one's already up $403. I could just take the profit and move on. I'm up 55% of this covered call. Instead of waiting all the way to next year, June, I could just take the profit and walk away with 55% profit. Also, that takes away, it gives me more buying power, less to worry about. So 730 call. Actually, I'm gonna sit on that one a little bit longer. Coca-Cola, I might roll this one. I'll look at that one tomorrow for a roll. LVS, that's way out of the way. Airlines have been just getting the crap kicked out of them. So that's Las Vegas Sands. Sorry, I thought that was LUV. Anyway, all right. I've got to go in just a couple of minutes, but I'm trying to get some information here. So who was asking about Project Options Edge? Was that Larry? Okay. Yeah. Let's see. Larry, if you contact, so to be safe as a Diamond member, if you contact support at prosperitybub.com, you can ask about Project Options Edge. Otherwise, I'll try to find a direct link to it. It's just something that the team's been kicking around. It's basically kind of my peripheral discretionary trades where, I'm going to throw in maybe an extra 50 to 100 trades a year, mostly for income, mostly good opportunities, depending on what the market offers up, like it is right now with like high IV ranks and high volatility. Having some really simple premium selling opportunities is paying really well. So plenty of good trades. I've already posted 2. I posted a Netflix trade, posted an Intel trade today. And we'll talk more. I've got follow-up classes there, I think, once a week. on that. And then Diamond Club members, I'll be doing monthly follow-ups with some bonus classes. But yes, on Walmart, in order to take that collar trade, I own the shares. And the reason why is if they get called away, fine. If there's downside protection, fine. So what I wanted to do is on anything I own, I want downside protection. That was my MO going into this year is I want that downside protection. Okay. All right. So I will let you go here for the final hour. We're going to have another couple of winners for the daily profit play. We've got 1 minute before the close. This will be a trade summary on the day. So this will be for daily profit play. Trade summary for 3/12/25. Trade 1 is the 50-cent credit. So the broken wing butterfly. 50 cents credit, 0 debit, keep full 50 cents credit. Trade 2 was the daily profit play. $2.50 credit, $2 debit, keep 50 cents net profit. And then trade 3 was a broken wing butterfly, 60 cents credit. And that's going to expire for full profit. Keep full 60 cents credit. So not bad on the day. 3 for 3 on daily profit play. Closing out Microsoft today, Google for winners, Walmart adding lowering the cost basis by anywhere between $1.43 to $4.38, and then reestablishing a new collar trade. I wouldn't mind seeing a bounce off of this, but just in case this thing wants to pull back, let's say to a 50% pullback zone, I'm going to have that protection. If we do pull back to about a 50% zone, I am happy to buy some shares in here, looking for a rebuild of Walmart. So, and it might take a while. I don't think this market's going to fall straight down and go straight up. I think this market would find a way to fall, base a little bit, chop around, eventually carve out this low, round out the bottom, and then work its way back up in a better environment. But either way, Walmart's a pretty good one to have and own. Dividends, nothing to write home about, but a pretty good stock on the defensive side. I know they're in the retail space, and that's probably not a good thing. But man, if Walmart can't make it as a retailer with some of the cheapest prices globally, you've got Costco, Amazon, Walmart. If you think about the retail space, that's a pure correlation to the consumer. So if Walmart's doing okay, the consumer is okay. But usually, even the wealthier demographics will ultimately shop at Walmart if they have to, if their wallet's getting pinched. So, okay. All right, I'm going to let you go. I got to jump into another webinar. Thanks for being with me today. I will see you tomorrow. Thanks, everybody. Bye.